Hello everyone, today I will discuss about SIBA's acquisition of Allied Colloids. A quick introduction about this case. This case was a competitive measure case. One can say it was a hostile takeover within these companies. U.S. Chemical company Hercules was the first company to initiate its $1.1 billion bid for Allied Colloids. After numerous attacks on its poor financial performance and undervalued bids, Allied continued to reject its undervalued bids. In doing so, it was in need of a rescuer, and this is where a Swiss chemical company, SIBA, came into place, which acquired Allied Colloids in a friendly takeover for $3.6 billion deal, outbidding the U.S. group Hercules. What caused Allied Colloids to become a takeover target? Typically, the logical motive for a company to become a takeover target can be for many reasons. Most importantly, the motive for any merger and acquisition decision is to maximize shareholder value. Mergers and acquisitions usually occur when a company wants to expand into either new markets and does not have the resources to do so, or when a company wants to develop a new business division or does not have the technology to produce that product or service. Particularly in this case here in 1998, SIBA was able to identify Allied as part of its strategic plan for long-term growth. Allied had proven record of organic growth. Allied was positioned in a niche market that SIBA saw value in. Also, Allied had pioneered innovative technology for water treatment. And upon doing so, it knew it would establish a new platform in a fast growing industry with an established global position already in place. How did SIBA value the gains from a merger? The value of the gains that SIBA valued the merger was achieved through its strategical planning. Being centered on the goal of maximizing shareholder value, SIBA knew that in efforts to sustain its long-term growth, it would need to gain good synergies with Collide. Typically, the justification of gaining value-added mechanisms from a merger is to determine how the target company will be beneficial to the acquirer. So in this case, SIBA understood that the merger between Allied Colloid would enhance the value of their business and as well as their overall product performance. As mentioned before, we can say that Colloids had market share in a niche, fast-growing industry, and it was very profitable that SIBA saw value, and upon doing so, it held strong financial metrics. In addition, SIBA was able to establish new water treatment divisions and go into the pollution, paper, mineral processing, textiles. But upon all of that, it overall strengthened its initial core from existing technology to adding more value into its products and services. What effect did the acquisition have on SIBA's balance sheet and performance? Well, prior to the acquisition of Eli Collide, on January 21st, 1998, SIBA entered in a large million multi-currency loan agreement to finance the acquisition. So it was pretty burdened in debt, but after the acquisition, it realized a negative net loss of $739 billion after writing off $1 billion in process research. I mean, there are many reasons to why they had poor performance. One of the first reasons is during that time of difficult market conditions. And secondly, as I mentioned before, they were locked in a large multi-currency loan agreement to finance this transaction. So its financing charges were related to the merger of Allied Colloid, which fully reflected upon the balance sheet and performance. But as we move on to the overall division performance, comparable between 1998 and 1999, we can see that there was a 3% increase in its operation performance in 1999. This also was contributed to the result from the improving market conditions and including the restructuring effects during the years that took place from 1997 and 1998. In addition, looking into this chart, we could see how each segment performed in 1998, and clearly among the divisions of additives, we can conclude that the water treatment sales increased from 2,349 to 2,921 billion compared to the rest of the division. So basically, the additives division proved to be that the merger was a positive strategic move. Who won and who lost? Well, after reviewing this case, we can agree that the U.S. group Hercules and um, and SIBA might have been considered losers, but mainly Hercules was the loser in this case. The fact that Hercules failed to fulfill their hostile takeover of Allied Colloids when SIBA outbidded them. In addition, as I mentioned about SIBA, the main reason that SIBA could be classified as a loser is perhaps after the acquisition, once it suffered its net loss of $739 million. This affected the shareholder equity, which in that manner affected the profits that are distributed among in the form of dividends. Um, but we could also classify that the winners of this case were SIBA and Allied Colloids. The fact that SIBA paid a significant price for Allied, which equated to 3 times the company's sales, we can say that Allied Colloids benefited hugely from this price. And then also, SIBA won this as a winner because it was able to gain a new platform for a business segment, and its pioneered technology and other trademark and patents which help produce its high value products and overall performance. Postscript after the acquisitions. Well, in recent years, after researching, a leading global chemical company known as BASF acquired SIBA for a deal of 6.1 billion Swiss francs in 2009. And in addition, the chemical group BASF agreed to buy SIBA to better compete in the paper additive by expanding its operations. We could say that SIBA was demised due to its two-thirds plummet of margins, so this acquisition was beneficial for BASF. Also, in addition, Hercules, as we know, failed the prior years to have a takeover with Colloids, and into other years, it also failed to previous growth plans, and it was acquired by Benz Dearborn in 1998, and then by Ashland Incorporated in 2008.